Ever wonder what the biggest, most powerful market on the entire planet is? Hint, it's not stocks, it's not bonds, it's Forex, the foreign exchange market. And in this explainer, we're going to pull back the curtain on the massive engine that moves our global economy every single second of the day. So, let's dive right in. Let's just start with a number that's, well, it's kind of hard to even wrap your head around. $9.6 trillion. And to be clear, that's not for a year or a month. Nope, that's the amount of money traded every single day. To put that into perspective, this one market is bigger than all the world's stock markets combined. It's truly the financial heartbeat of our planet, and it quietly affects everything, from the price of your coffee in the morning to the biggest international business deals. Okay, so what in the world are people buying and selling with all that cash? You're not buying shares of a company. It all boils down to one simple fundamental idea: the currency pair. See, in Forex, you never just buy one currency by itself. You are always exchanging one for another. The best way to think about it is like a constant tug of war between two different countries' economies, and their currencies are the rope. And here's the trick to reading them. The first currency in the pair, that's the base, is always equal to 1. Simple. The second currency, the quote, is the price. It's telling you exactly how much of it you'd need to buy just one unit of the base. That little ratio, that's what makes the entire market tick. So for instance, if you see the British pound versus the US dollar trading at 1.25, it's just a price tag. It means one British pound will cost you $1.25. Simple as that. When that number starts to move up or down, that's where traders see a potential opportunity. All right, before we go any deeper, we've got to learn a little bit of the lingo. The jargon can sound pretty intimidating from the outside, but trust me, the main ideas are actually pretty straightforward once you break them down. First up is a big one: leverage. You can think of this like a financial magnifying glass. It lets you control a really big position with just a small amount of your own money. But, and this is so important to remember, it magnifies everything. It can amplify your gains, but it can also amplify your losses just as easily. It's an incredibly powerful tool that you have to respect. And to even use leverage in the first place, you need something called margin. Now, don't think of this as a fee you're paying. It's more like a security deposit. It's the bit of your own cash that the broker holds onto just to make sure you can cover your side of the trade. And finally, let's talk about a lot. See, currencies aren't traded $1 or €1 at a time. They're traded in standardized chunks called lots. The chocolate box analogy is actually perfect here. You're not buying one single piece of chocolate, you're buying the whole box. It just makes the entire process standardized for a huge global market. Okay, so we've got the language down. Now let's zoom out and look at the big picture. Why is this market so unbelievably massive? Well, a big part of the answer is that it's truly global and it literally never stops. Think about it like a relay race around the globe. Just as trading is winding down in New York, it's firing up in Sydney and Tokyo. And as Asia is clocking out for the day, London and the rest of Europe are just getting started. This constant handover means the market is always on, always reacting to news and events in real time. Now, this chart, man, it tells a fascinating story about global power. Just look at that top row. The US dollar has steadily grown to be on one side of almost 90% of every single trade. Now, look down a bit at the euro and the pound. You can see their slice of the pie has been shrinking. And then you've got the Chinese yuan, which has exploded from less than 1% to over 8% in just 15 years. This isn't just data. This is a map of economic influence shifting right before our eyes. So where is all this trading actually happening? Well, you might be surprised to find out it's incredibly concentrated. As you can see, London is the undisputed king, handling a colossal 38% of all volume. A big reason for that is its perfect time zone, sitting right between Asia and the Americas. The US comes in at a distant second. Get this, together, just these 5 cities control the flow of nearly 80% of the world's currency trading. Now, with this kind of scale and speed, you can imagine there's a ton of opportunity. But, and this is a big but, that brings us to our final and maybe the most critical section: understanding the very, very real risks involved, especially for everyday folks. I mean, the whole thing sounds amazing, right? A fast-paced market with the potential for high returns. It's essential to stop and ask yourself, so what's the catch? If it were that easy, why isn't everyone doing this and getting rich? And here it is. This is the stark reality, backed up by hard data from regulators like the UK's Financial Conduct Authority. A staggering 80% of retail trading accounts lose money. Remember that powerful tool, leverage, that we talked about? Well, it's a brutal double-edged sword that can wipe out an account just as fast as it can build one. So how can you protect yourself? You have to be super careful. Anyone promising you guaranteed high profits with little to no risk, that's a massive red flag. Steer clear of any high-pressure sales tactics. And always, always make sure any broker you're thinking about using is regulated by a real financial authority. So, we've seen its mind-boggling size, we've broken down its basic mechanics, and we've faced its inherent risks. It leaves us with one final big thought to chew on. In a world where trillions of dollars can move across the globe in a split second, based purely on data and trust, what does this endlessly flowing 24-hour market tell us about the very nature and the future of money itself?